So do you think that institutions will start jumping on board? And right now we're seeing mainly retail, or we have seen retail mainly prop up the market in the last couple of months. Some suggest that with ETFs about to be approved or potentially being approved this year in the United States, we could see various institutions having to buy Bitcoin. Would you agree?
I think ETFs would be a positive catalyst. Before it would have potentially been a negative catalyst because it could have taken away this GBTC premium trade. But now that that's already over, a Bitcoin, ETF coming about would open up newer sources of demand. So a lot of money managers and stuff would feel more comfortable and basically able to access that market more easily for their clients if there's an ETF. In the United States. And so I think that's one of the catalysts that can help out. We're also, we can pay attention to see what NIDA reports about their client demand. Overall, they, from their public reports, they've been rather consistent about, the institutional demand for their products. And so it's going to come down to what a couple of different large pools of capital are doing in addition to the smaller pools of capital.
Lyn, you have a newsletter out that goes into depth on fiscal-driven inflation. What are some of your key findings in the context of what it means for Bitcoin?
So a lot of people are comparing this environment to some of the risks that we saw in the 1970s inflation. But my research have shown that in a lot of ways, this is much more similar to the 1940s inflation in the sense that it's very driven by fiscal spending rather than bank lending. And so the money supply is going up a lot, not because banks are lending, but because governments, especially in the United States, are running very large fiscal deficits and having that monetized by the central bank. And because federal debts are so high, and because we've been in this, kind of long period of disinflation, at least in some categories, they're very kind of adamant about holding rates pretty low, even as inflation has these kind of transient upward moves. And so generally, when you have that environment of negative real yields, for example, historically, that's a very good environment for gold. And so that, lately we've been seeing a little bit of rotation from Bitcoin back into gold after we've had kind of that other rotation. But in the long run, that kind of environment should be good for most real assets or most, scarce assets of some sort. Because when your cash holdings are failing to keep up with inflation, there's a strong incentive to go out and buy things like commodities or gold, or, we'll see how Bitcoin responds here. But overall, a scarce asset like Bitcoin should do pretty well in that environment once it gets through any sort of transient pressures that it's going through at the moment.
Right, I see that you are into value stocks at this time and selective about growth stocks. Are you still allocating or have any allocations to Bitcoin?
Yes, I remain long Bitcoin, and so for my type of investing style, Bitcoin is one of the segments within a larger diversified portfolio, and so we branch out into multiple different asset classes, especially equities, and Bitcoin represents kind of a big kicker there. To benefit from this, longer term secular adoption of digital assets.
And so would you say that this is a good time to buy? It's a frequent question we get.
I think it's a good opportunity if someone, for example, doesn't have a position and they're always, worrying that Bitcoin is too expensive for them. But I think it's important for people to clarify their timeline. And so if someone's going to buy now, but then if it goes lower, they're going to sell in 3 months, then it's probably not, the best asset for them. However, if they look at all the research, they're confident about Bitcoin's network effect, and they're interested in owning that protocol for the long run, these sort of corrections and consolidations are good times to kind of start a position. And then they can, choose based on their conviction level, based on, whatever goals they have, for their portfolio, how much they want to dial that up as part of the portfolio. But my base case for a while now, ever since early last year, is that it's good to have a non-zero Bitcoin position.
Right. And, reflecting on the Elon effect, how Bitcoin rallied when he announced Tesla bought $1.5 billion worth of Bitcoin and would accept BTC for payments. And then we saw the price crash yesterday when he said Tesla would not accept Bitcoin payments because it's hazardous to the environment. Is that troubling to you that one person can have such impact on the markets?
I think it's not healthy, but I mean that was a very short-term issue, and so we've already retraced a lot of the price gains since the announcement of Tesla's purchase of Bitcoin, and so I think that the community overall sometimes goes through periods where they're overly reliant on one source. So, for example, I mentioned how big of a force that Grayscale was for a while, and then we kind of transitioned to the Elon source, but for Bitcoin's health overall, it can't really be tied to the decision of one person or one group of people. And it's really about, the network's going to succeed or not succeed based on its inherent, technical nature and based on its network effect. And so I think it's unfortunate that this Elon kind of reversal came out, because it actually overshadowed some more promising news around some of the partnerships that, for example, NYDIG is doing with banks, and with kind of progress in Taproot and things like that. So while kind of the price action is attracting a lot of the headlines, under the surface, the fundamentals and the network effects still look robust.